Good day. I'm Angel from Futech.io, and we take the guesswork out of decision making by matching qualified buyers to sellers in an easy way. Our matchmaking methodology has assisted our sellers in generating nearly $1 million worth of revenue. And today I'm super excited to be speaking around the topic of banking for startups and SMEs. I have an exciting guest, Craig Chinnappen, director at Korea Mart. And previously, he was a business banker at Nedbank as well as the Standard Bank Group. He has a wealth of experience when it comes to personal and business banking, debt counseling, and mortgage orientation. Craig, such a pleasure to have you here today, my friend. Welcome.
Oh, thank you, Angel. Thank you very much for having me.
Fantastic, fantastic. So just to kick us off, please tell us a little bit more about yourself and your company.
Okay. My name is Craig Chinnappen. I'm currently a director of a company called Korea Mart. We are an importer of Korean noodles. We supply Spa and a couple of the bigger retailers and wholesalers in Western Cape. I'm currently doing their marketing and sales strategy, but I've known Angel for quite some time now. We met through banking about 10 years ago, I think, or something like that then.
Yeah.
I've got a background in a whole bunch of different financial services. So Angel knows me from personal and business banking, but I've also worked in debt counselling and mortgage origination. That's me in a nutshell.
Fantastic, fantastic. Such a pleasure to have you here, man. Now, just to take us forward, I know you have quite a wealth of experience when it comes to banking and working with small businesses. Now, what are the fundamentals of banking for SMEs and startups?
Definitely the cornerstone of all banking is opening an account. Everyone needs a business bank account to run and to trade through. The real big factor on that bank account is using it correctly as the correct sort of tool to help your business scale from startup to growth phase to being a mature entity. Right? So understanding what and how to use that bank account is very, very fundamental, I think. But then also as your business starts up and as it grows, it might need different products besides a bank account, right? You might need lines of credit, you might need insurance, you might need a card machine, you might need a payment gateway if you have a website. So being able to identify what products and services are needed. Obviously, your bank and your banker would have to help you with that there. But these are some of the other fundamentals around when you first start banking and as you begin to grow. Once the account's set up and your business is flowing and you have money running in and out your account. The second bit is being able to use that account properly, right? And that's to be able to demonstrate to the bank that you are credit worthy, that you manage your business and your business accounts and your monies correctly. So because ultimately at some stage most businesses will need to access lines of credit to grow. Whether it's to buy a property for the business to trade through, like a warehouse, or whether you need vehicles, or whether you need equipment. At some stage you'll need to lend money through that business, and if you're not using the bank account correctly, you're going to struggle, right? So that's one of the other big fundamentals. A third is as we begin to move into a more digital world, the banks have kind of offered a whole bunch of digital services, right? Which ordinarily you'd go to a brick and mortar institution like a branch or an ATM, for example, right? Now you can do these things on your phone. You can do them remotely. Like some banks, like Absa, for example, they offer services on WhatsApp. There's a whole bunch of very complex things built into the tech nowadays, like machine learning and voice and facial recognition. That's with biometrics, for example. So the banks are becoming more tech savvy in how they service their clients. So you as a consumer need to understand what tools are available to help you manage your banking. So that's the I would say another fundamental of startup banking. Once once you've got your account set up and you're using it correctly, and you're starting to become credit ready, then making sure you have the right management controls on your bank accounts is quite important. So, if you're a sole trader or a one-person business, then it's quite easy for you to manage your banking because you do all the banking yourself. But as you begin to employ staff and as you need to segregate duties, you need to have some sort of management controls on your account to make sure that your accounts are being properly used, right? And there's various products which the banks might have available which will help with that there, like a caption release internet banking, for example. These are the sort of management controls which are important on managing the banking, and it's quite specific around what sort of industry your business operates in, and there could be different products or services available. So yeah, I would say these four things are really, really important when it comes to the fundamentals of banking.
Fantastic. I think well explained, very clear in terms of what matters in terms of fundamentals from opening that account to the more complex situation in terms of running your business. Now, what challenges have you seen that startups and SMEs still face?
So I think I alluded to earlier, you find a lot of businesses who are in startup phase they're quite informal, right? There's someone that operates from the garage or in the kitchen, or someone that's just started up a side hustle from their 9 to 5, or someone that's been retrenched and in this economy, and they're looking at moving into a business venture out of necessity, right? What I see a lot while working in the bank is that these businesses are more informal, so they're not structured correctly, right? They don't use their accounts properly. They're very cash driven, so a lot of their financial reporting is not visible. And so the big challenge is starting to change that mindset. That a lot of people don't want to pay tax on the income they receive, and they don't want to disclose all of that. Some of it's deliberate, and some of it's not. I think the important part here is that like I alluded to earlier, that at some stage you will need to access credit as a small business for a variety of reasons. And if your income is not being disclosed, it's not reported anywhere, it's virtually impossible for a bank to offer you these sort of into assistance. Now, banks like F&B, for example, they have designed products geared towards informal traders. So they've got like a zero fee bank account for sole proprietors, for example. They offer particular banking services for informal traders where money's not running through bank accounts. But they're not, how do I say this, consistent, right? You can't say that all businesses are able to benefit from product services that F&B offer to informal businesses, for example. So I think one of the best ways to change this over here is to sit down with a business banker, for example, or a business manager, and ask them for guidance and advice on how to structure your business going forward. But definitely what we need to see is, what the bank needs to see is that incomes are being disclosed properly. Once that's being done, right, then how do we look at the correct of financial reporting to show the bank your financial performance, A, but B, for income tax and VAT purposes, that's also really, really important. You don't want to be managing a business and get into trouble with SARS at the end of the day. And SARS has been quite strict over the past year. because of all the lost revenue that occurred as a result of COVID.
And SARS is obviously the tax service in South Africa.
Yes, of course, yeah. So it can be called something else in a different country, but your national tax authority, I would say, right? That be very deliberate around how this is structured. So plan towards it. I think that's the important part. Don't just neglect it, right? A lot of small businesses ignore this over here, and it comes back to bite them, right? Either in the form of not being able to access credit when they need it, in the form of exorbitant accounting fees because you've built up 4 years or 5 years worth of reporting which hasn't been completed, or if that local tax authority decides to do an audit on you over 5 years or 10 years, it would be difficult for you to pull together financial information at short notice to them, and expensive as well. So, not to mention the potential fines and penalties that could arise out of that. So that's one of the big challenges which I see with small businesses. The next bit is a big lack of financial management for business owners. So I'll use an example. Someone who is a very, very good baker, and they know how to bake something in an oven and the temperature needs to be. They know how to mix the icing and what ingredients to go in, and so that's all quite specific technical knowledge, but they don't know where to source a cheaper input into the baking, to get flour or to get eggs from somewhere. They don't know how to manage cash flow because they need to buy those goods, and they need to bake those goods, and need to sell those goods. And that might take a couple of days for money to come in, but they need to buy more inventory. So how do they manage the cash flow? Maybe they need to bring on staff for delivery or to help them bake or whatever, and they need to pay those staff. And again, so how do they manage their cash flow? So, a lot of business owners, they work this out as they go along, but that's the issue, right? So there's a big lack of financial management knowledge for startup businesses, and these businesses might take longer to grow because of that lack of knowledge. One of the other big issues I see is that businesses don't digitize their business offering. So, for example, I might see, I've seen a furniture store that did really, really well for a number of years, selling furniture at a fixed location, right? They advertised, they published in the newspaper, and they lost the signage around the premises. But year on year, they saw their sales declining. They saw, they were getting squeezed by their suppliers. They were, there were a lot of competitors that came into the market. Now, if you continue trading like that business did, that business would go out of business within a number of years because it just wouldn't be able to survive. And when I spoke to that business owner, he never had a website, and he didn't have any social media or digital presence, and that I see is a common theme around a lot of small businesses, that they don't have any digital presence. And given the way the world works now, if you don't do that, it's a big recipe for failure. So I think that's one of the other big challenges which I see from a lot of small businesses. And then lastly, and this is a little bit unrelated to the business itself, but more from a personal point of view, and that's being able to manage your personal finances and segregate them from the business effectively. Now, what that means is that when you do need to access credit, or even just apply for certain banking products with this credit risk, you will get declined by the bank if your own personal credit record is not well managed. And that's really important because a lot of business owners tend to overlook that aspect. They say, well, my business is doing really well. Why, when I'm lending through the business itself, why is my personal credit record being reviewed? And that's because you, as the principal of that business, you manage that business's finances. So if you don't know how to manage your own personal finances, the bank is not gonna look favorably at lending through your business, right? So that's really, really important, managing your own personal finance, making your personal debt, your personal account is up there, is not overdrawn, but debt is paid on time and in full. your debit orders don't bounce. So that's really, really important. And that also comes, with that comes a very good segregation of personal business finances. So, a lot of business owners say, oh no, but the business pays for all these things. They cover the petrol, they cover the cell phone, they cover, these personal expenses or whatever. That's all fair and well if your financial reporting is good. But if it's not good, then you need to segregate those things. You need to make sure that you pay yourself a salary or a weekly wage or whatever, and you cover your personal expenditure separately from the business. I think these are a lot of the big challenges which I see from business owners. And if you as a business owner can get over these things over here, you can definitely help scale your business faster than they would nearly have gone otherwise.
Wow, I think that's quite a list of challenges that are I think would be helpful for founders to be, or existing founders, and a lot of it has to do with administration and just doing things right from the beginning. And if you don't have these things in place and you're already running a business that's generating $1 million plus, or lower, whatever the amount is, it's very important to get these things in order. And what you said here about digitalization, it's an important thing. We're still in COVID, we experienced COVID, and the importance of digitalization now and looking at post-COVID is so fundamental, not just to survive, but it opens you up to a new market. Import, export becomes a possibility because you're not just focusing on a specific geographic area, depending on obviously what kind of business you're looking at. Now, there's there's connotations and ideas around also putting money in the bank and having a business account. There's still some people that would rather put money under their pillows or under their beds, even if running a business. Now, I would like to understand, what role does the bank play? What essential role does the bank play for startups and SMEs?
Basically, what the bank does is help guide you as a business owner. I think that's the first thing, right? Is to guide you as a business owner on which products and services are suitable for you as a business to then match your business needs. Now, sometimes you don't know what you don't know, right? So you wouldn't know, for example, that if you were running a bakery, that you might need a point-of-sale device, or that point-of-sale device would need to be integrated with your inventory systems. And so, any bank or banker worth their weight in salt would be able to inform you what products are available and help you make informed decisions. So that's the biggest role that a bank will play, is just making sure that you're up to date with what a bank potentially offer you, what it costs, how to use these products, what to do when they don't work, and all that comes from the quality of the bank, right? As well as the quality of the business banker that you have. Now, in South Africa, what we often see is that all the major banks offer a business banker as part of your business banking offering, which is free of charge, and it comes as a virtue of you having a business account at that particular bank. Some of these offerings are becoming more digital, but because business banking is so vast and complex, and very industry specific, so basically, a business A could do something very similar to business B, but they could have completely different products for a different product need or different pricing needs. And so a good bank and a good business bank will be able to guide that business in terms of what products are very, very suitable for it. What that then helps you to do is position yourself correctly, so that once you do start to grow, once you go from a phase of startup to growth to mature, that you're aware of what it is you need from the bank, and you position properly to then go put those things into place when you need them. And so that's another big aspect is that the bank, through its products and services and through its information, helps with your decision making, which helps to facilitate your business growing. One of the other things which a good bank or a good banker would help you do is that help you put suggestions in place which are proactive by monitoring how your account is operating. So I'll use an example. Let's say that the baker that we spoke about earlier, that set up their new business, they were making use of a lot of cash transactions. So basically, their customers were paying them in cash. And in South Africa, it's quite dangerous to walk around with money. And so, I think a lot of people know that there. And so, from a risk management point of view, you don't want to be, walking around with a lot of cash, because the criminals in this country potentially target you and put yourself and your business and your family at risk. So a good banker might pick up and say, but hang on a bit, Mr. Baker, we see that there's a lot of cash deposits in your account. They're also quite expensive. How about we suggest a different product for you? Or how about we look at why you're using cash more, and we start, trying to get you to use more of card sales, for example, or have your clients be able to make payments in other ways besides card? What about with their phone or with Apple Pay, or so a good bank or banker, through monitoring how you transact and behave, and your transactional behavior, be able to suggest appropriate products and services for you. And that's really important, because again, come back to what I said earlier, you as a business owner, you don't know what you don't know. And so unless you've got someone there to actively guide you and help the decision making, it could be difficult. You could make quite costly mistakes. I'll use an example. There was a pet store owner that I knew that had a card machine for a number of years with a particular bank. And that bank didn't actively guide him and say, well, look, right, your business is growing in turnover, so the commission we charge you on that card machine, we should be lowering it because we're charging you quite a lot of money. And after about 10 years, he approached his bank to query it. And he was quite upset because no one had ever once picked the phone and called and said, look, Mr. Pet owner, pet store owner, you could probably benefit from these services. And he closed that account and he went somewhere else. And that was quite a costly exercise because he wasted a lot of money in that 10 years, right? And you as a business owner, you're so focused on making sure that your inventory is stocked and making sure that your staff and your suppliers are paid and making sure that everyone is sorted out and your business is well maintained and managed and your customers are happy, and you could overlook certain aspects, right? It's very, very easy for that to happen. So again, coming back to what the role of the bank will be is that to be able to proactively and actively manage help you manage your banking. I think that's really, really important from the role of the banker. And if you have a bank where the banker is not doing that there, or the bank itself is not doing that there, then pick up the phone, contact your banker, and ask them. Set up a meeting, be proactive around it. Don't sit and wait for this to happen. So I think another story is that story cuts both ways, right? You as a business owner can't expect the bank to do everything for you, right? You need to be proactive as well. It doesn't hurt to pick up the phone or to email, if you have WhatsApp your bank and say, look, I'd like to have a meeting with you, even if it's only once a year or once every 6 months. Let's do a review of my facilities, tell me what you think, or I'm looking at getting into this new business, or this, I'm looking at making these changes to my business in the future. What advice do I need from you? What products are good for us here? How do I position and gear myself? Am I managing my account correctly to do what I need to do? So I think while there's a lot of importance on the role what the bank plays, what the bank can help you with, I think you as a business owner also need to understand that the bank is not there to manage your business. They're not going to give you advice on economic indicators and what new markets to operate in, and whether the supplies you're using are appropriate. I think you as a business owner take control of that there, and then develop a good relationship with your bank and your banker, and then use that to make informed decision making.
Fantastic, Craig. I think I love what you just shared there. And just to open up again, I think you mentioned that South Africa is dangerous. Obviously, I just want to clarify, if you're walking around waving your money, obviously.
Yeah.
But if you're discreet and stuff, it's great. South Africa is actually, Cape Town was just voted number 3 top city in the world a few days ago. So it's a great tourist destination. And you have to be discreet in those things, but like take caution. Obviously banks play an essential role in making safety and everything like that. Now, in terms of some of the things that you said there, I love what you shared about the role the bank plays, and the fact that it's also not there to run your business. At the end of the day, they do support you, but it's important to understand is what role do they play? As a business owner, it's important, I believe, not to reinvent the wheel. If you can use already existing and basically take advantage of the resources out there, it's important. But first and foremost, you need to know what resources are available and how to take advantage. So I think very well shared, and thank you so much for that, Craig. What I would also like to understand now, if I'm a business not in Africa or in another African country, and I'm looking to do business specifically in South Africa, and I need a business bank, what are the top banks in South Africa that I would need to know? And what is the top bank that, as an international company or another African company, I would first consider to do business in an easy way in South Africa?
Okay. So to answer that question, I'm a little bit biased because I worked for a couple of banks, and so I know certain banks really, really well, and others I haven't worked for, so I don't know them very well. But I would say in this country there are 4 main business banks, and that's Absa, Nedbank, FNB, and Standard Bank. There are a couple of new players that have come to the market over the past couple of years. I don't know a lot about them, so I can't make any recommendations there. These are banks like Bidvest and Mercantile's been around for a while. They were bought up by Capitec recently. And then the kind of high level banks like Rand Merchant Bank and Investec. So I'm not going to speak about those banks. The high level banks and the kind of new entrants. I'll speak about the main banks in the country. So I think anyone looking at getting into banking in this country, I would say look at those 4 banks there: Absa, Nedbank, Standard Bank, and FNB. First National Bank is known. I would say the bank with the biggest African presence, and definitely in terms of market capitalization, is going to be Standard Bank. They have exposure all over Africa and parts of the world. They are very, very big, and so they have a lot of dealings with a lot of currencies that someone trading outside South Africa might require. And they have branches which are under the guise of Stanbic. So I would say Standard Bank is probably going to be, if you're looking at an inter-African bank, Standard Bank is probably going to be your best bet.
Fantastic. Awesome. I think, thank you so much for that. Now, what you were speaking about banking resources earlier. Now, maybe we can just dive a little deeper into that. What banking resources are on offer for companies, and how can they take advantage of these?
Yeah. So I spoke quite a lot about it under the role of the bank, which is knowing your business banker. That is really, really important. Now, once you know who your business banker is and what your business banker does, that person there or those people, for example, it might be a team, right? It might be a suite or something like that. And they are there to help and guide you and to teach you on what products the bank offer, what services the bank offer, what meets your business's needs, how to implement those things, how to troubleshoot if there's problems, how to interpret the services and the costing. And so if you don't know who your business bank is or how to reach out to a division within the bank to support you, you know, it's quite difficult. You'll have to be you know, going online and looking for things. And you know, business banking is quite vast. There's a whole bunch of different products and services and solutions available. And so it starts with your business banker, knowing who the business banker is. And then the business banker, what they would do is more than likely, they don't do the work directly themselves, right? They act as more like an account manager. And they will refer you to the correct department, whether it's someone in vehicle and asset financing, whether it's in commercial property financing, whether it's someone in one of the insurance divisions, whether it's someone in merchant acquiring, point of sales, or payment gateways, or whatever the case, right? So they will refer you to the relevant specialists to go and deal with whatever you need. But it first starts with knowing who your business bank is or how to get hold of someone in your bank to help with that. One of the other things which banks start to do quite a lot is they have invested quite heavily on within their digital service offering and their contact centers. And what that allows you to do is to do your most of your basic servicing and product applications through digital offerings. So you can apply for new accounts on the app, for example. Even, you know, certain banks offer very easy access to credit. You know, when I was at Standard Bank, they had a product which paid out within 48 hours of recently an application on the app. And with most clients, it was like 4 or 5 hours. So you know, the banks have invested quite heavily into their digital service offering. What that does result in, however, is that you might find that there's less physical banking infrastructure, less branches, less branch staff, or whatever. So the important part is to understand is that if you don't know what digital offerings are available, contact your bank, go to the website, go to the app, whatever, have a look and read, right? Do your own research. Don't just take it at face value that whatever you don't know, you call your banker. Because, you know, you could wait a day to hear back on something quite simple, but you could have done this yourself online on your app within 2 minutes. So making use of the digital offerings is quite important. Another really important resource from the bank is their contact centers. A lot of people don't like contact centers, and I don't blame them. You know, you call a call center, for example, and you get pinged from one person to the next, and no one ends up resolving the query. That's true in most cases, but if you know who to speak to, and again, this would be where your bank comes in. If you know who to speak to, make a list of these phone numbers. So if you have a card machine with the bank, for example, right, make a list, make a number for their merchant contact center. So when there's issues of you know, batches not being banked into your account from your card machine after cashing up, or you know, so there's a hot card that was swiped, or the machine itself is not registering, there's no network. You know, to call merchant, right? The merchant service center, because you need a quick fix in that thing. You know, what you might find is that a particular banker might have 500 or 700 or 1,000 clients. So you might have to wait a little bit of time to get that done. This might happen after hours on a Saturday evening when your restaurant's most busiest, and you need to be able to get this resolved quickly. So look at the important contact centers to get things done, right? Each bank will have a centralized business banking contact center. Make sure you get that number there as well. They have an email address. You can send emails for statements and for general servicing there, for internet banking limits, that sort of thing, for reversing funds in your account, you know, for reporting fraud. There's a whole bunch of things that can be done from your from a centralized business banking line. what they can't help you with, it'll be that same query via the contact center will be referred to your banker to come deal with. So I think understanding how to get hold of the correct contact center for your sort of query is really good resource for you as a business owner to then go and tap into. And then I touched on this earlier, and this is also quite important, and that's to make sure that you know there's a reasonable expectation on how long it takes to resolve something. You know, I think a lot of business owners might get to a stage where they're banking with, let's say, for example, a private banker. And that particular private banker might do things very efficiently because they have a support team that services them. Private banking requests, for example, not the same as business banking requests. And, you know, a business banking query might take a bit longer, and it's important not to get frustrated around it because, you know, as a business owner, I think a lot of new business owners don't really know this. They might not have encountered this. It's not all banking is the same. How personal banking is treated is a lot different than business banking, and so it's really important to have a reasonable expectation on how long it takes to get things done, you know, and then how to follow up on things, right? You know, make sure that when you're contacting contact centers or bankers or whatever servicing that needs to be done or whatever you need to do, make sure you get reference numbers and you can track those to make sure that there's appropriate turnaround times. The SLAs are adhered to. So you know, those are a lot of the resources, I think. You know, once you know how they work, and that might take a little bit of time, you can then start to use effectively. Your staff can also use effectively. If you haven't got time to sit on the phone, for example, get one of your team members to help with this, or send an email, right? And that also might be a much easier or faster or more efficient way for you to deal with something.
Awesome. I definitely know, you know, the benefits of having a business banker, you know, and how it accelerates and saves you a lot of time, because I think as a business owner, it's also about how to spend your time effectively, you know, and that goes back to how not to reinvent the wheel, you know, why should you go sit in a bank queue for 3 hours when you've got resources that can help you accelerate that, and spend 5 minutes contacting your banker around something, and you know, 2 hours and 55 minutes actually working on the business, moving the business forward, because essentially it's always about moving the business forward in a smart way. Never mind about petrol prices going up now to drive to the bank. Now, Craig, I think, you know, you covered those resources, which was really great and important for founders, entrepreneurs, business owners to know. You know, if you're not already utilizing some of these resources, have a look at it. You know, is this the right time to use it? Because everything works with time. Obviously, you don't need everything all at once, you know, but it's important to know what's available and for you to decide when it's essential to reach out or to contact. But a business banker, I would say it's important to have that relationship right from the beginning, you know, for the business banker to understand you, your team, and what you're doing, because they can better advise you on where and who you should speak to, and can also make good connections. You know, we had a very good relationship, which was great, and it's only grown further from there. Now, Craig, when it comes to startups and SMEs ready and looking to expand into other parts of Africa, how does the bank help that process?
So, the answer to that question really depends on what these businesses are doing. So it's a bit difficult to answer specifically, but some of the general ways which a bank would help a business looking at scaling the operations overseas. Once you start looking at doing business overseas, there's certain things that you need. One of those things we're looking at at how to manage your foreign currency. Another one of those things would be how to manage your risk. And then what other products which you might need around that then. And not just products, but services as well. These are some of the things generally which a bank would help with. So I'll try to touch on all these points here. The first part is looking at your forex, your foreign exchange. If you are looking at selling goods overseas, it would imply that you were exporting, and you would then receive payment in foreign currency. And because you were getting payment in the foreign currency, the amount of money in foreign currency would change depending on the exchange rate. And so, first of all, what a bank would help you do is convert that currency from the foreign currency, let's say US dollars into South African rands or whatever the case. And obviously there would be a cost associated with that there. There would also be a way to manage that export by looking at ways of what they call forward cover, and that would help you to fix exchange rates, like let's say 3 months or 6 months in advance, and that way you could better manage your cash flow. I don't want to get into the specifics around that there, but I think if you are looking for a way to manage your foreign exchange risk, then a bank would definitely help with that there. And then let's say, for example, you were wanting to buy from something from a foreign currency, a foreign country, so you were importing, and this importer is someone that you didn't know. Sorry, where these goods were being imported from were from a supplier that you didn't know. What a bank would be able to do is help you find a way to manage the risk on that transaction. So instead of you paying the supplier overseas, you would put together something called a letter of credit. So what would happen is, let's say Standard Bank would tell you, the person or the company that you're buying from, look, here's a document to show that this person has X amount of money in his account, which will be used to pay for those goods once those goods have now been shipped from wherever they're coming from. So that letter of credit, for example, the LC, it's a type of guarantee, and a bank would help with that in particular. Again, I'm a little bit biased here, but this is from my understanding my time from Standard Bank, whatever. Standard Bank had two particular divisions called Trade Club and Trade Suite, and what Trade Club would do is help you as a client vet a supplier that's based in China. China's one of South Africa's major trading partners. And so if you were buying from a Chinese supplier and didn't know anything about them, and obviously there'd be doubts of the veracity or you being able to trust what that supplier, who they are. So if you don't know a supplier, making a payment overseas can be very, very dangerous and very, very risky. So what Standard Bank has a database of approved suppliers based in China, for example. And these are companies which have done business with South African companies or even other African companies across the globe. And so you could place a lot of reliance in the fact that Standard Bank has pre-vetted this Chinese supplier. And so what Trade Club would then do is help you to then make an informed decision about who you're buying from, to say that this business in China has been vetted. These goods are manufactured and an appropriate quality, so you'd have a lot more faith in making these payments. And then they would also help the trade finance on things where there need to be letters of credit or guarantees in place around the supply of these goods. So this is another way in which it gets quite specific in terms of what it is your business is actually doing and where a bank would fit in. So that is very, very case specific. Using the same example, Standard Bank also had a division called Trade Suite, and what Trade Suite would do is look at sourcing a company which might deal with the shipping insurance, the goods in transit on that particular import. Maybe a clearing agent to help clear things of customs in this country, logistics on the distribution from the harbor to your distribution center, or your warehouse, or your manufacturing plant, or whatever. So this is something else which a bank would then help with a business wanting to do business with other companies outside of its own country. One of the other big helps or assistance which banks give are just general financing. If you are looking at scaling, you might need working capital, or you might need some sort of outlay in order to scale. So if you were looking at opening another manufacturing plant overseas, or if you were looking at buying buying some vehicles to help you to increase your fleet size, if you are looking at employing more staff, for example, or looking for a new premises to operate from, for example, then definitely that's where a bank would then come in to help you raise that capital, and obviously advise you and sort of gear you to the right sort of approach needed to get these things done, and then also just help you make informed decisions. It's not always a good thing to bite for a small business to bite off more than it can chew. You need to facilitate organic and sustained growth, and sometimes a bank can be something to bring a business owner or a business back down to earth, because you as a business owner might think, look, actually this is a great idea, for us to start looking and going overseas, and we need bank financing. You go to the bank, and the bank declines the application and says, but look, actually hang on a bit, this business can't afford to sustain this over here, or we think that what you're going to be doing is too risky, and so we're not prepared to lend you to go and do that there. And it might help you to have another opinion in terms of what it is you're actually doing. And so also just really, really important. I think I've covered quite a few things. Do you have any questions around that?
No, I think that's awesome. I think what you covered is 100% awesome, especially like I know a lot of, especially in the startup side, there's a lot of companies that are excelling in the startup side. Yoko is a startup. Take a lot as a startup. There's other startups that people might not be so familiar with, that are making $3 million, $4 million per year, and are doing well, but they don't want to be limited just to one market, and are looking to expand into other parts of Africa. And Africa right now, it has 6 of 10 of the world's 10 biggest growing markets are in Africa. Africa is also the fastest and biggest growing economy right now, which means it's a great place to do business. And I think it's very important to understand and to be very clear as to businesses that don't already know is when they're looking for other markets, when it's time to grow, how do they do it? And one of the things you also mentioned is more about African businesses doing business with international companies. The example that you mentioned there of doing business with a Chinese business or European business, the vetting is so important. You don't want to make a payment and then realize this company is fraud. Cybersecurity is only going up. I have a history of working with a cybersecurity company, so I know what happens in the background is that cyber crime is really high at the moment, experienced by everyone, and it's so important before you press pay or you send money to be very sure. So these services, additional services, they're so important. And tell me, if I am looking for the bank to assist me in vetting a company in Europe, or in Asia, or in America, and I'm here in Africa, is that an additional cost that I would have to pay?
So it's quite specific. I know with the Standard Bank trade club and trade street offerings, they tend to focus on China because of the relationships they have. So I can't answer for other countries around Europe and the Americas, for example. But I know with that particular offering, there's no additional cost. You know, you must think about the bank as a business as well. And so it's also a really important point here. Think about the commercial aspects of a bank and where it makes its money. You know, Standard Bank would make, any bank would make money from the foreign exchange. They'd make money from the commission on the insurance, for example, on the logistics. You know, so they might be prepared to offer that vetting service free of charge, off the basis that it's making money somewhere else, right? So coming back to the vetting question, the vetting that you asked for, mostly there wouldn't be any direct cost, but there'd definitely be some sort of indirect cost.
I think that's excellent. I think it's always good to investigate, because obviously the biggest worry for any founder is cash flow. You know, using up money on resources. A founder might be, if I can vet myself, I don't need to pay $2,000, 2,000 Rand for you know, the bank to vet for me. But if this is all inclusive, let's use it. You know, if there's things that you have available, that resources or tools that you're not using that are available, you know, you're not taking advantage of what's there for you. Hence why it's so important to understand what you already have available, that's all inclusive, that you can use today, you can use tomorrow, and you can help your business in excelling. Now, you know, we can't speak about banking and not have a discussion around fintech. You know, I'm very interested from a banker's point of view. How has fintech affected or disrupted banking?
So fintech is a little bit of a sensitive word when banking, because I think, you know, a lot of people think that fintech companies come in and disrupt banking. They take away market share from banks, and you know, that has negative impacts within banking itself. And that I think was mostly true a couple of years back, but I think the banks have evolved over the past couple of years to become more competent towards fintech companies. The biggest way they've done that is become what's called platform businesses, right? And so what that basically means is that a fintech company would piggyback off a bank's infrastructure, and then use its services, right? Or use its infrastructure to be able to market its products. So I'll use an example, right? Someone like Sage Pastel. A lot of people know Sage as an accounting service or bookkeeping service, right? And there's a few others. There's Xero and there's QuickBooks or whatever. And basically, what would happen is this accounting service would then have an integration with a bank's internet banking to be able to pull through its banking information into its accounting software to then be able to obviously offer an accounting service. Now, as a bank would then have to grant API access to that particular company, and that would allow, you know, there would be an automation of banking services towards this accounting company, and then this company would be able to offer its products to its consumers. And what the bank has started doing is opening its systems and its networks and its databases towards more fintech companies. Obviously, in a secure way, because of in this country, there's there's the POPI Act. So how a bank itself would share personal information, is very, very heavily scrutinized and very secure. And data breaches are very severe consequences. But banks have begun to offer more integration to fintech companies, and so even though we're seeing a lot of big players coming through the fintech space, like Yoko, for example, or like companies like Time Bank or Bank X or 10X Investments or whatever. The banks have become a little bit more smarter in how to deal with these, and are saying more like, well, look, if we can't beat them, let's join them. That's the approach I think banks are taking. Now, what that has is a direct impact on a bank's offering and its costing. So you might find, for example, a bank might say, well, look, right, we don't need to be in the space at all. We've got a company that does this way more effectively and for more cheaply than for what we can offer. And the big reason of cost is that a bank has a lot of legacy infrastructure and systems, which would invest in quite heavily over a number of years. They're not able to offer the same costing as a brand new fintech, whereas their staff and new technology and can offer a much cheaper service to that consumer than what a bank can do. The second impact which a bank will do is they'll say, well, fine, look, we're happy for that fintech to offer that service. What we will do is we won't compete against it. We'll just buy half of it, or we'll buy 3/4 of it. So they'll invest into that fintech. Now they own that fintech, right? So in effect, you might see a different brand altogether, but will form part of a bank's group. And so banks are quite smart when it comes to that regard. One of the other impacts it'll have is that because fintechs come to the market and they disrupt, it forces change out of a particular industry or service offering, and so you might find the cost of those services come down quite heavily. So there's a lot of good impact coming as a result of fintechs, but then being in a bank or working in a bank, you might say, well, actually, hang on a bit, a bank might have closed 30 or 40 branches in the past 2 years, right? And maybe as either repurposed or retrenched staff or something like that. And so there could be some negative impacts to the bank itself, but to the end consumer, to the client. I think there's a lot of positives to take out of this. There's more choice. There's more flexibility for you as a consumer. And so I think there's a lot of good things coming from the fintech space at the moment, and the banks are definitely jumping on the bandwagon to expand this.
Fantastic, awesome. I think that's well answered, because fintech is huge now in Africa. It's the area or sector that gets some of the biggest investments coming into Africa. I see it in the startup side all the time, and it's great to hear from a banker's perspective as to how it's helping the end consumer. Because at the end of the day, products that come to existence are supposed to help the end consumer. They're not supposed to make life more difficult. Simpler, easier, cheaper. Everyone has different values, but at the end of the day, it should benefit the end customer, whether it's a business or whether it's an individual itself. Craig, I think this has really, really been fruitful. Thank you so much for your time today.
No, more than welcome. Thank you very much for having me. It's been really good. Really good being here.
Fantastic. So this episode was powered by Futech.io. We take the guesswork out of decision making by matching buyers and sellers in an easy way. Join our community. Africa is the fastest and biggest growing market. Become one of the pioneers in doing business in Africa. Whether you're out of Africa or looking to expand in Africa, Futech.io, join the community and let's change Africa. Thank you so much. Take care. Till next time.